Okay, traders. Now it's time to get a little bit tuned in, right? We've just flicked over into the new month. Markets are primed. There's lots of pressure buildups. Like what I'm talking about, that is potential trading opportunities coming up. So let's just have a bit of a look here and then piece it together. Number one off the rack today or this week is the RBA rate decision. So let me just focus on that and what's to come later in the week. Now, equity markets. Well, markets are shut. The 4th of July holiday, okay? But what we can see here is just piecing together a bit of a risk-on day. You can see the Euro, Sterling, Aussie, Kiwi responding up about somewhere between 10 and 15 points, right? Hardly anything to write home about, but a little bit of structure in the market. Bit of a risk-on day. We're seeing cryptos going up, okay? I'm starting to feel a little bit more comfortable already. All right, now let's just have a look here at the chart. So the good thing, I've been doing a lot of work here, right, on the merging the FX Pro Trader, the Advanced Pro Trader, and the workshop courses into the Financial Markets Masterclass. And I've gone through and I found a whole heap of other things, especially doing with a few one-on-ones with a few traders, has really isolated areas that need extra attention. And I'll tell you what, it's never looking better. So I'm getting a little bit excited about the opportunities coming up because we're quantifying risk a little bit tighter, a little bit more precise, right? And building things around that. I'll give you another video on that shortly. But just having a quick look around the grounds, right? As you hear, usually the, CNBC or whatever it is, covering all the sports. You're like, okay, let's have a look around. Like the dollar index, okay, it's sort of trading mid-range, but it hasn't gone down. The markets still know the Fed is on track to be aggressive. Excuse me, right? So that gives us a general overriding sense of direction. I know things are trading sideways just at the moment. Those first 2 weeks of the month, very proactive, very directional. Third week, a little bit. Fourth week drifts off, right? So this is why it's so important these first 2 weeks, because we get the traction, connection with the fundamentals to the central bank plan, and that maps out the direction for the coming month. Not only do we have the Fed in play, but we now have just about all the other central banks jumping on board as inflation kicks through the roof. Obviously, today we'll have the Aussie, but just having a quick look here, Euro's drifted lower, drifting sideways at the moment. Same with the equity markets. But the overriding theme here, equities down. Obviously, the crypto's down right at the moment. Commodities down. Gold. Oil is forming a real good technical base. Once again, a real pressure build up here back towards that resistance trend line. It's pretty hard to work out with oil what's going on, whether we're looking at stockpiles or whatever it is, especially when OPEC, etc., and the US, stockpiling stuff and saying, oh, it's not us, there's no supply when they've got it all, pushing prices up. Anyway, that's a whole different discussion. Gold trending down with that big clean out, but still sell on rallies. And that's where we are, right? But today it's a bit more specific, right? Because we've got the RBA. Now, if you have a look across the bottom pairs here, I'm starting to get a lot more confident in the market, right? You have a couple of losses, you take a few on the chin, you lose that sort of confidence. But look at the way these things are all lining up. Now, to me, it's a little bit early to be drawing a trend line straight to this top here on Euro, but down, we drift sideways as we come into the key data, right? There's a lot of European data, non-farm payrolls Friday, RBA today, and let's piece it together. So, and unlike a couple of the pairs, if you look at the Aussie, it's right on a key level, right? Now, to me, right on that, I would be like, okay, that's interesting, right? I know the RBA meeting is today. I need to work out here, what's this thing doing? Take a deeper dive into the technical aspect of the Aussie. Now, I know Metastock took off the flex docs, but I'll see if I can work out a solution for that. So you see right here, I mean, this is like the 4th or 5th touch. It's right on that level. With the RBA announcement out in 5 hours and 16 minutes, right? It's probably going to be enough to shake out a few weak stop losses here on the top side, right? But just have a look here as well. This is the interesting part of it, right? You've got the daily chart at the same level here, right? So the the whole sort of short-term, medium-term trend here is right at a juxtaposition, right? It's on a balance, like a seesaw. So we could see some action here. Now, think of the global markets too, right? It's not a time to sort of think, oh, this is going to go through the roof. The Fed are coming up. Non-farm payrolls Friday, following week or so is when the CPI comes out. So we've got a chance to take out some stop losses here. Now, it's really going to come down to what the expectations are for the RBA. And with that, let me just flick over to the data here. So the previous rate, 0.85, the forecast is for a 0.5 hike, right? That's pretty much fully factored into the market. All right. So when you are looking at the fundamentals, this is the key part. So what you have to do is, this is the forecast number. Okay. We have to sort of match up the actual number. Now, if they, for some reason, and they're usually, when the markets are running hot like they are, they're very transparent. If for some reason they only raise by 0.25, right? Well, the Aussie goes down, gets belted as everyone has to unwind those positions. If it comes out stronger than 0.5, which I can't see because that would send panic through the market, like the housing market would absolutely crap itself. If it went 0.75, it would scream to the top side, right? So what they do is usually they forecast, they put it out there. Yeah, look, 0.45, 0.5 is the one. So that is generally the outcome, right? I'm mentioning those two outlying numbers because that's where the potential risk is. So 0.5%, that's great. It's really going to come down to the statement, right? And you can actually obviously get this prepared yourself. It's going to come down to the statement, how aggressive they are in that. I think at the moment, inflation's only at 5.1%, right? Not like the US where it's at 9% in the UK. So they've got a bit of room to move here. They can go aggressive on the next rate hike. And I think it's going to be a wait and see. I think they'll still be hawkish, but not like the Fed where they're going, you know what, we're doing 0.5 next month, 0.5 next month, and 0.5 again, really giving it to the market to really try and stop them spending, etc., right? To try and stop them raising interest rates. But they put the plan out there, and if you don't fit into line, they'll do it. They'll execute it. So that's one of the key things you need to understand there. The other part is get to the RBA page, work out where the interest rates are. So if you come up here to monetary policy decisions, all right, then you can come down here. Now, right on 2:30 p.m. Australian Eastern Standard Time, they will come out here. There it is there. The statement will be posted here right on the time, right? So you can read it at the same time as the bankers do. You just click on the statement, media release. They'll tell you, the market would have already moved, like they're looking at 50 basis points again, right? So just scroll down to the bottom here, start to look at the bottom paragraph. This is where the answers for what's going to come up next, this is where they will be, right? So you can work out very quickly what the plan is. The board expects to take further steps in the process of normalising conditions in Australia over the months ahead. The size and timing of interest rate increases will be guided by the incoming data, which is exactly what we want to know. And what data? Inflation and the labour market, right? These are the two kickers, right? I've made a bit of an adjustment to the daily trade routine to include the kicker because they've highlighted these two data releases, they are super important. They're actually better trading opportunities than the central bank rate decision and statement, right? Because these are numbers. You can just easily go in and buy and sell. If these are strong, they have to raise rates. If they're weak, they don't do anything. They don't cut. They just don't do anything. So that's what we're sort of focusing on. So that's where you can sort of help yourself, right? Get some understanding about this. I mean, I talk about, and I've been doing this for 33 years or something like that. The more you help yourself and understand what's happening in the market, the quicker you'll be able to interpret that in the future, right? Take control of your destiny. So that's the RBA. So with the data, get the timing, you look at the trading opportunity. Now, this is where it comes back to the technicals, right? And you are looking at, oh, wow, okay, do I get long here? Well, if they go by 0.5, we may see it go up a little bit. Don't forget there's resistance line up here around 69.50. And It's the same sort of longer term one. I know it's only got a couple of touches there, but it's there, right? They have to say something super crazy in their statement to get this thing to keep going up, right? And then as it gets closer towards Friday's Fed employment number, it's going to lose momentum because the pressure is now on the US dollar. We get strong US non-farm payrolls Friday, Aussie goes back down regardless of what happens today. So, but then obviously put the other picture together, hawkish or very aggressive hawkish RBA, weak non-farm payrolls, dollar has a breather, Aussie pops. So this is where we can try and piece it together. The question mark is, are we a buyer or a seller? To me, overall, until the daily trend line breaks, and you can see here also it's a little bit higher on the weekly. It's at a bit of a crossroads. I think it's this is my interpretation of what I think will happen. I think it's at a bit of a crossroads. We will see a bit of a clean out to the top side. The market will realize that the RBA are not here to strangle the market. And then we'll see a clean out and we might see a drift lower as we go through the rest of the week. That's my sort of guess. I can't see them being crazily hawkish to really scare the market, right? It could really give the economy a shunt and stop everything. So that's where we are. It's interesting. So would I be buying here on the announcement? Well, this is where you got to weigh up. Are you going to make enough money out of this? If you put a big trade on here, right, you're looking at say 20 or 30 points to the top side. You're putting a big chunk on. That's a lot of risk on a central bank announcement, which is statements. There'll be comments. It's just a bit too hard for me. If you want to go in with a super aggressive risk profile, right, which is not consistent with building capital, then you go in with a small trade size, look for the opportunity. To me, the smarter one is, right, wait to see what they do, see what the reaction is. If it stalls up here, then look to get in. In fact, like a false break trade here or up here makes sense because the overall long-term trend is still down. The only thing that blows that out is a really strong statement. Once again, it's not a number. You got to read it. They could come out with comments and really enforce that or not. So the movement up here around these levels is less predictable because of the comments and the statement, interpretations, etc. So it's not the best, but after it, and even a few minutes after the event, we'll have a clearer picture of what the RBA are doing, what the plan is, and where the currency is. You don't need to make all the dollars on this opportunity. And as I said, when you are looking at the overall overriding factor, if you come into like the last policy statement, right, and you go down here, the best trading opportunities are now the inflation numbers and the labor market numbers. They're numbers, and they tell us if they're strong, they're going to raise rates again. It's simple. They're your two big trading opportunities, not necessarily the central bank announcement. All right. So one other thing is obviously having the Aussie on multiple timeframes here daily makes it easier. I understand Metastock have taken off Flex Docs a couple of years ago. I've still had them because I've been using it for so long. So that's one thing you can try and work out on your charts. The other thing would be get up your Aussie template and have a look through the crosses. Ideally, and I'll be setting this up shortly, is having these, say, 6 major Aussie crosses, right, in multiple timeframes as well, because then you can go back and go, okay, how does Aussie yen look on a short, medium, long-term chart, etc. So you can see where the overriding trends are, and it's a key part to your daily trade routine. Identify the direction, then you look whether you're a buyer or a seller, and then you can factor in the central bank on top, and we go from there, right? So is it a great trading opportunity? Not necessarily, right? The central bank meetings, because they've got 3 components, and especially the comments that come out afterwards can really screw things up, and the interpretation of the statement may be misinterpreted or not. Liquidity disappears and it comes back. It's not the best trading opportunity. As I said, the inflation and employment numbers are, because they're now told us that that's what they're looking at. So that's where we are, guys. It's the first part of the week, right? If I just come back to here, now have a look and piece the rest of the week together. Now I've just taken out, I've just got the second and really high impacting numbers here on my screen here. So just having a look, obviously the RBA is here. It's the prime event through the Asian session. We are starting to get all the fresh numbers coming out. These S&P Global Services numbers, never really connected with those numbers, but they're there. It's worth checking out. And as we go through, the milk auctions are massive, by the way, for New Zealand. I haven't seen any changes in the numbers, but if they did vary somewhat, it would cause a major impact. And then you've got a whole range of data coming out, right? We've got the US, first round of US numbers, factory orders, industrial orders. These are good numbers. Don't forget, the US North American market is just coming back online. So they will be kicking into those numbers. ISM non-manufacturing numbers, good number to be checking out. The JOLTS job openings, well, I tell you what, if the market's really fickle, they'll have a look at those, but it's not like super important. Then you come down later in the week. This is where we start to connect all the varying US numbers. You get the initial jobless claims, the ADP national employment numbers. The market will try and connect some correlation there with the non-farms. Usually speaking, if they're in line, they're in line, but there's no clear correlation. The Ivy PMI for dollar CAD, a really big number. And then we've got the non-farm payrolls Friday, right? So first week, there's no need to lose all your cash in this week, right? Don't go limit down getting the answers. We want to go limit down on potential trading opportunities. Trading the big numbers, we know it's tough. Liquidity falls out, comes back in. But what we will get from this is a bit more of a clearer picture of what the central banks need to do afterwards. And that's where we're getting these trending moves. So potentially, if you want to trade these events, I would suggest smaller trade size, smaller risk. Like, you don't want to put a dent in your capital, but you can potentially add some cash. And once again, if we get the answers here on the non-farms or the employment, then you know what? You can add to the position and look for trending opportunities on your charts. All right, that's where we are, guys. So to me, if I just switch over to this one, I've got the my sort of secondary screen here ready to roll. So it's no surprise it's on the Aussie dollar. So what I'm looking for is, I've got these levels here. I've actually taken out that first level because there's two resistance levels on the top side. Then there's one, a couple of 100 points away. It has stalled. It is above this level. The RBA will decide, or should decide, whether it goes up or down. That's the big question mark. 0.5% is factored in. It's going to come down to the statement, which we don't know about, and potentially some comments. And you can see here as well, it had that little dip down below on the dailies. It's back above the level. Still pressure on the downside, but right now we might see a little reaction if we get super aggressive. As I said, my general thinking is maybe test this 69.50 level and back down. And if they only go by 0.25, which I can't see, then it just comes straight streaming off again. And that's where we are, guys. So anyway, tune in to the, it's a great time to be getting your charts up to speed, get some confidence back, and get ready to trade. All right, guys, have a good one. Cheerio.